Good evening, everyone. Welcome to Officer 24/7. This is a YouTube channel, JAIIB CAIIB English Medium, and I am Niharika Walia Bhatnagar, and I'm going to take up the session of ABFM today. Everybody, am I audible as well as clearly visible? Happy Vijay Dashmi, Happy Dashera, these, whatever we call it. This is basically the day when we symbolize this Dashera as a particular time when there is a situation where we talk about uh, the inner honesty or inner, I would say, the goodness of a person wins over the evil there. That is what we talk about in terms of Vijayadashmi. So, good evening and happy Vijayadashmi again. Okay, everyone, now let's start with the particular session. What am I going to talk about today? I'm going to talk about a specific topic called uh, this is related to the specific area of module C, I believe. Hai. So we're starting with the module C. We were done with major parts of module B. So this is our series 3000 plus MCQs. So first of all, please share the session, like the session, and subscribe to the channel right away, everyone. This is the specific area where we talk about the corporate valuation. This is the topic of corporate valuation, everyone. When we define the term corporate valuation, what does it mean? When we define the term corporate valuation, it refers to a situation where the organization has uh, the organization wants to know where does it stand in the market. Okay? That is why we call it enterprise. Whatever your value is there in the market is called enterprise valuation. First of all, you have enterprise value plus short-term debts minus long-term debts. The book value plus preferred securities minus cash. Equity value plus debt plus preferred securities minus cash and cash equivalents. Last is market value plus total liabilities minus reserves. Basically, when we talk about enterprise value, the term enterprise value is based upon what? The term enterprise value is based upon a simple concept, that is your entire equity to be included, entire debts to be included, your preference share to be included, reserves and surplus to be included, and deduct only one thing, that is your cash and cash equivalents. Cash and cash equivalents are basically something which we are avoiding in this case. Okay? Done? Chaliye. Now, let's look at the next question. If I talk about this particular question itself, what's going to be the answer? The correct answer to this question is actually C. Enterprise value, if you really have to define, is what? Enterprise value can be defined as something which is definitely defining your organization. Okay? Next question, please. Here comes the next question, everyone. The next question says that the market approach, we're talking about the marketing approach now. Okay? So when we talk about the market approach, it says that it is widely used. It is widely used to compare uh, the various companies, okay, on their basis of past performance. Market approach helps us to know whatever their past performance was. Then the market approach values the company by comparing it to a recent transaction. We'll also compare to a recent transaction that we are doing. So in this case, what's going to be the point? Both assertion and reasoning are true, and reasoning is the correct explanation, right? Then what's the next part? Next part arises here is that both assertion and reasoning are true, but reasoning is not correct. Assertion is true, but reasoning is false, and assertion is false and reasoning is true. What's going to be the answer, everyone? When we talk about the market approach, what is the market approach? You look at your valuation from the point of view of the market itself, not your valuation. Huh? This is from the point of view of the market. How does market signify it? So market approach is basically comparing your transaction with recent. वैसे तो this is relative approach when we talk about your comparison with the other organizations which are existing in the market. So in this case, what's going to be the correct answer? Done, everyone. What's going to be the answer? When we talk about the market approach, you're looking at the market. So when we talk about the market itself, A is false, but the reasoning is correct. The market approach is based upon comparing your company with similar companies which have been recently sold because you want to know what is your market value. So rather than the past, you don't look at your past. See, past can help you to analyze your future, and that too based upon if you remain the same. If you are changing, then obviously things will change further as well. The simple reason is if the past analysis is gonna change further because of the fact that the organization is going to go through changes, then this becomes irrelevant. ठीक है ना? Past performances can help you to find out whatever is happening in the future, but not your market value only. Okay, book value provides an accurate market-based assessment of the company's worth. ठीक है, book value helps to basically understand what is the value of the organization in the balance sheet overall. Then book value is derived from a company's balance sheet and reflects the value of its assets minus liabilities. Book value is basically something that we define as this is not market based. Book value is something where we record everything from the point of view of the organization, everyone. We're not looking at anything else but the organization only. That means this is our purchase value of that particular asset, or we can say the net worth of the organization is determined on this basis. ठीक है ना? Then book value is derived from a company's balance sheet and reflects the values of reflects the value. I think if I really have to look forward towards the question, they have the similar points. First is both are true and reasoning is a correct explanation. Both are true but not the correct explanation. Then assertion is true, then reasoning is false, and assertion is false and the reasoning is true. So in this case, what's gonna be the answer, everyone? When we talk about the book value is organization's value in its own books. है ना? So in this case, if it's organizational value in its own books, what is it gonna be? Both assertion and reasoning are true? No, it cannot be. First part is definitely false. Net worth is basically studied on the basis of what you feel about yourself. What is the value that the organization is writing in its books? Not something which is happening in the market itself. Huh? So this part is definitely something which is wrong. Right? So, what's going to be the answer to this point further, everyone? So, in this case, your assertion is definitely something which I believe is definitely wrong, but the reasoning is correct. Okay? In this case, the reasoning is correct. It's just that one statement is false and the other one is true. Next question. Which of the following is a statement related to the market approach and income valuation approach? How do you define the income valuation approach, everyone? Income valuation is basically how much earnings this organization makes. है ना? That is how we define this area. How much money the organization is making is super important for us. So market approach is based upon what? How do market looks at you? How does the market feel about your working altogether can be defined under this area. Both approaches, market approach and income approach. Market is based upon whatever is happening in the market itself, your valuation in the market. While the second approach, what do we do in terms of the second approach? When we talk about the second approach is income approach. How much money do you make as a company? Both approaches can rely on historical financial data. Market approach is not based upon the previous data. The market approach is comparable transactions, while income approach is on future cash flows. नहीं. Income approach ignores the future earnings, or market approach calculates value based of the book value. It doesn't take care of the book value at all. So in this case, the correct answer is actually B. Market approach is based upon comparable transaction. You compare yourself with another organization of the similar industry, and then you try to find out where you stand in the market, while the income approach focuses on the future cash flows. है ना? It is focusing exclusively on the future cash flows. Done? चलिए जी. Now let's look at the specific question further. Why is understanding the factors that contribute to value important for management? When we talk about the factors which contribute to value, important. See, value consideration, value addition plays a very important role for any organization. Why does this happen? Value addition is going to save your organization for the future, because you keep on adding one other thing now. Then in this cases, to comply with the regulatory requirements, no, this is not something which will help in the regulatory. To prepare accurate financial statements, that can be one point. To estimate the effects of the various strategies of the firm value, yes. Once you know about your valuation, things become very clear to you. Next part is to determine the employee salaries. This is not the point. So in this case, the correct answer is C only. Though B is also very near to the question, huh? But in this case, the correct answer is this only. Done, everyone? Got the idea? Chaliye, let's look at the next question. The cost approach is also known as the asset-based approach in the corporate valuation. The cost approach determines the value of a company by calculating the fair market value of its net assets. Cost approach is basically an approach where you're trying to look forward towards your organization's value itself. है ना? So if you're trying to find the value, there's nothing bad in finding the value, but you have to see whether you're looking at the previous cost, the current cost, what exactly you're looking forward to. So this is an asset based approach. That is true, because historical cost of the asset is there. The second part says the cost approach determines the value. Yes, it does. Basically, it does the on the basis of whatever the value is today. That is why we call it fair market value. And acha, fair market value in the worst cases is normally taken when the organization is ending. See, if I am using a car for quite a long time now, at that point of time, I don't need to revalue it. But when the organization is dying, when I am going to sell my car, at that point of time, valuation of the car is required. So happens with this case as well. In terms of fair market value, you normally need it when the organization is dying or liquidating. Okay? So both reasoning and assertion are true, and R is the correct reasoning. Or A is true, A and R are true, but not the correct reason. A is true, R is false, A is false, R is true. The answer is basically both of these are correct, and also it is the correct explanation as well. Done, everyone? Chaliye then. Let's move on and talk about the next point. What's the next question, everyone? The next question says reasoning and assertion. The sum of the parts analysis is a technique used with the cost approach to determine the company's total value. Sum of parts analysis helps each individual asset separately and aggregates their values to arrive at the total enterprise value. What's going to be the answer in this case, everyone? Both reasoning and assertion are true, and R is the correct explanation. Both reasoning and assertion are true, but R is not the correct explanation. A is true, R is false, and A is false, R is true. What's going to be the answer, everyone? When we talk about the sum of the parts analysis, in this case, the correct answer is both are true. And sum of parts is basically a method which is again related to the cost approach. You value the assets separately and then you compare and combine them together. That is how we get the value of the sum of parts. Okay, na? Whatever parts you have created, you find out all the values and then you do the total of it. Chaliye. Next question, everyone. The primary focus of the cost approach is to determine the company's intangible assets. The cost approach evaluates the cost to rebuild or replace the company's tangible assets, indirectly reflecting the value of intangibles. Cost approach basically helps to find out your value of the assets. When you know about the value of the assets, you know what your net worth of the organization is. If the valuation is good, you know your future is secure. If the valuation isn't good, then organization has to rethink how are they going to survive. So both assertion and reasoning are true, and reasoning is the correct explanation. Both assertion and reasoning are true, but R is not the correct explanation. Assertion A is true, but the R is false. Assertion is false, and the reasoning is true. Everyone? What's going to be the answer, everyone? When we talk about the cost approach, now, yes, it basically includes everything in terms of the valuation there. And the next part is the cost approach is basically linked with the asset value. Either the asset value would be the correct value or the value which you are calculating on the basis of present scenario. So in this case, the correct answer is A is false and R is true. R is definitely correct. Acha, theek hai, there's one pointer. Cost approach is not linked with only intangible assets. It is linked with an intangibles as well as tangibles. There is a point there. Cost approach is based upon asset as well as liabilities, everyone. But when we talk about exclusively assets and exclusively the liabilities or exclusively tangible or intangible, then it doesn't make sense. This is the place where they are going wrong. Right? Chaliye. Now let's move on to the next question. There's a case study, everyone. XYZ Electronics is a company that produces electronic gadgets. The company has assets such as cash, receivables, inventory, machines. Recently, they decided to revalue their assets due to changing market conditions. Below are the current details. Their cash and cash equivalents are given, receivables are given, inventories are given. The current market value is lower than the book value. Machinery's net book value is basically 1 lakh. Replacement cost, sorry, this is 1 CR, है ना? नहीं, this is 10 lakh, ठीक है. 10 lakh rupees and replacement cost is estimated to be 8 lakh. मतलब we have got it for 10 lakh, we have written it as 10 lakh, but if I buy a new one today, it would cost 8 lakh. This happens when your organization is using a particular technology which is now older, then things are definitely going to be different. ठीक है ना? Okay, now let's move on to the next point. Here comes the first question. Cash and cash equivalent for XYZ Electronics should be revalued to reflect the current market conditions. Cash and cash equivalents, they are already in the current situation. I can now say that the 100 rupees has to be revalued again to find out what's the value of 100 rupees. No, cash and cash equivalents are always valued at face value and do not fluctuate. That's one particular part. Cash does not fluctuate. I cannot say the value of 100 rupees has gone up or down. It still remains a 100 rupee note. Yes, the money that I'm spending and getting something out of it can vary. That is true. So is A and R are true and R is the correct explanation? A and R are true, but R is not the correct explanation. A is true, but R is false, and R is false, and A is false and R is true. The correct answer to this question is A is definitely false. Cash does not get revalued. You cannot revalue 100 rupee note and say, "Arey, it has become 1000." I wish this could happen, but ultimately this doesn't happen. So that's one particular reality. You know, when you have money, then the money definitely goes in a different manner altogether. Okay? Done, everyone? Next question. The machinery of XYZ electronics should be revalued in terms of, it should be revalued on its replacement cost. Replacement cost reflects the current value of the replacing an asset, which is critical for determining the true net worth of the long-term assets. Agreed, everyone. If I bought a piece of land a few years ago, na, the valuation is not required. But if I bought a piece of land in 1980s or 90s, at that point of time, the value of a piece of land was very different to today's world. That's one particular reality. So this is something which doesn't work that way. So both A and R are true, and R is the correct explanation of A. Both A and R are true, but it's not correct explanation. A is true, R is false, A is false, but R is true. So in this case, when you're trying to look forward to the machinery of XYZ, electronics should be revalued based on its replacement cost. You have to look forward to that. In terms of assets, you have to get it at the revalued cost, and at the same time the replacement cost is also chosen for that. So this is one particular portion which is absolutely correct. Everyone, if you haven't subscribed to the channel, then go ahead and subscribe to both the channels, that is Officer 24/7, where we are teaching in a bilingual format, and this is our channel JIB CIB English Medium, where we are exclusively keeping the classes for English medium. So all you need to do is just go on to our website, that is www.adda247, and if you're planning to purchase any of our courses, then hurry up. For CAIIB, the crash course has just started. Along with this, not only the crash course is there, but we also have the specific area of we have revision batches would be coming up soon, but right now you can get our crash courses. The crash course is starting from morning till evening. So what you need to do is just click on this area of buy now, use the specific code Y, use the code Y 541 and apply it, and you will get it for 79% discount. That means 80% discount is going on if you're downloading the app first. So if you're planning to purchase our courses, then hurry up and do it right away. Get it for 4115.79 right away. Everyone, this particular course is not only helpful in terms of your studies, but yes, in terms of your testing part as well. You will not only get the tests there, but also live classes. Along with this, ebooks are there. Ebooks matlab you don't have to buy your Macmillan books at all the books and their gists are covered here. For example, this is ABFM. ABFM book has got 25 chapters. All the 25 chapters are given separately. So this is gonna be helpful now. You don't really have to go through the ebook and then come back to this area. So you should definitely go ahead and check out our ebook directly. This is what you can do, and all these other specific laws and everything else is given here. Along with this, if you go for the test series, look at this part. If you go for any of our test series, this is our test series, individual test series as well as the chapter wise test series, everything is available. So if you are planning, then hurry up and buy it right away, because this particular opportunity would end soon. So 80% discount at the time it's going on. Grab the offer right away. Thank you so much for being there, everyone.